Hi, my name is Catherine Woolsey, and I'm doing the second video blog for Business Information Systems. And we were asked to watch a video on high-frequency trading called the $1 Million Microsecond. And it was a really interesting video. Two guys were discussing basically the relationship between high finance, information technology, and information systems. And, of course, the high-frequency trading and how it's changed throughout, its beginning. A couple of the questions that we were asked to answer is, what did we find the most surprising, exciting, or disturbing about the podcast? One thing that I found interesting was how things have changed and how quickly things have changed. And, you kind of know that, but hearing the stats on going from trading in like 11 seconds each trade versus now where we have 1 second with, I don't even remember the number he said, but it was like billions of trades every second. And I thought that was pretty surprising how fast we've changed, but also pretty exciting how, quickly we've progressed. But also a little disturbing because that's a lot going on when it comes to high frequency trading. And so I thought that it was pretty interesting. The next thing they asked was, what do you feel like the ramifications of this type of trading will be for the future of the stock market? Now, I think that one thing about that is that the common man, it's hard to keep up with this kind of trade. It's really fast paced. You have to know exactly what you're doing, and I feel like sometimes people get into it without understanding it, and then they're not going to do as well because they don't fully understand it. But also, if you're not in it, then you're not going to have the information you need, because it's all about getting information first. It's all about who's going to have this information and who's going to, it's all about competition. And so you want to be in it, but also you have to be smart about it and you have to understand it, because if you don't, then you're not going to be successful, especially with the stock market. And then it says, are free markets equipped for the speed? I'm not sure that our free market system is completely equipped for how fast this is going. I think that, the stock market in the past, like they talked in the video, they had that little glitch where basically it just timed out. It's kind of like a short way to say it. And it crashed, and I think that with things going so quickly, that could definitely happen, where it just kind of catches up to it, and things are going so fast people can't keep up with it, and the computer systems, falter or fail. Even like I have too many Excel sheets open and my computer will crash. And that's kind of a minute example, but basically just that when things are working so quickly and things are working so hard and they're working on so much at the same time, eventually something's going to happen where it just kind of times out. So I think that that definitely is possible, and I'm not sure if we're equipped for the speed. The next thing we were asked is to find an interesting article on the web about high-frequency trading, and one that supports our position. And then it says to explain how computers are used in this example to make the buy/sell business decisions, or basically why the authors of the article are arguing for or against high-frequency trading. Now, the article that I found is by the Wall Street Journal, and how the Wall Street Journal does it is they take different investors, they take different CEOs, they take different financial advisors, and they ask each of them their opinion on high-frequency trading, which I thought was an interesting way to do it, because you're getting a bunch of different perspectives by different types of businessmen and women. And in each one, it talks about their opinions, whether it be that they disagree with it, or whether they believe that it doesn't really have a big effect on the individual, or if they believe that this is something extremely important. One of the people that I agreed with was this guy, Larry Zimpelman. He talked about that book, Flash Boys, that kind of sparked people, really talking about this. And he talked about how with the high frequency trading, it's really important that people keep up with it, because that's where information is coming from. That's where, all this trade and how competition keeps up. And he says it is going to be important and people are going to be able to keep up with it. But also at the same time, he said that let me find it. He basically just explained that it would be a tragedy if the individual investor concerned about the impact of high frequency trading decided to not invest in the equity markets at all. Said if you pick good companies or pick mutual funds or investment funds with good long-term track records and reasonable investment management fees and have a moderate to long-term horizon, the impact of high-frequency trade would be hardly measurable. But then he also said that we should not concern ourselves about high-frequency trade because us to make the worst investment decision to not invest in equities, or even worse, to not invest at all. So basically he explained that, yeah, it's complicated, yeah, it's a lot going on, but also at the same time, everyone should still be investing in it, and that would be the worst thing, would be to not look into it and not try it out. And I do think that innovation is extremely important. I do think that this is one of the next big things, but also at the same time, it's going to be hard to keep up with. Some of the people who disagreed with it, or one person said that they don't think that it really has relevance to the common man. It said that this man, Ted Jenkins, he said high-frequency trading should not affect the normal investors at all because the regular investor has no business sitting around and trying to day trade their stock portfolio. He said equity investments should only be considered if you have a long-term time frame to hold your investments. And then he said the majority of investors who get burned do so because of their own lack of judgment or over-emotional decisions, generally resulting out of fear or greed. And I definitely agree with that when it comes to people trying to make these decisions. That's definitely one on the going against high-frequency trade. So it's hard because there's definitely pros and cons to it. And there's definitely ways that we could benefit from this, but there's also ways that we could get burned. And so I haven't researched it completely enough to solidify my opinion. I feel like I'd have to really get and understand it more. And so that's why I enjoyed this article by the Wall Street Journal, because it goes through all the different opinions by these different individuals and their experiences, and just learning about that. So that's why I chose that article. And then the last question was said, with regards to faster connections between cities and within the stock exchange building, when do you think the high-speed race will end, and why? Now, I don't know if this high-speed race is really ever going to end. I do think that it's going to keep going, at least for all of my generation, at least. I think that, competition, Adam Smith's philosophy on the invisible hand and how we need to constantly compete. This is what competition is. This is what it's looking like today. It's high-frequency trading. It's trying to get information first, and whether we get burned or whether this race ends, maybe. I don't think it will. Why? Really just because it's the future, and people are, wanting to progress, and this is progress. So I think that it's not going to end. It's just going to keep moving forward, and we're going to keep figuring out better ways to do things. And so that's kind of what I went over on high-frequency trading, and I hope to continue to learn more about it. And that's all.